G'day guys, Justin Pickett back with you for another video. It's a bit of trivia, this one here. Just got a long-winded question on someone wanting to know the definitions of some of the acronyms and things that we use within lending and building investment properties. So I thought I'd quickly run through each of these in a quick summarized version of what it means, and hopefully it makes sense and might help you out there if there's a definition that you're not sure about. So equity, what is equity? Equity is the difference between what your property is worth to what you owe and the difference in between. Next one there is COS, C-O-S, contract of sale. So when you're buying a property, you'll need a contract of sale from your agent or vendor. LVR, so that goes in line with our equity, as I mentioned, the loan to value ratio. LMI, lender's mortgage insurance. Some people hate it, some people love it. It is something that basically it's a premium by the lenders that covers them in case you default. And in order for them to give you the lending that is outside their parameters, you need to take out lender's mortgage insurance. So it covers the bank in case you the bed and you have to pay the premium. Sounds like a pretty deal. It somewhat is, but it allows you to get into a property with a 5 or a 10% deposit. But if you can get 10 properties instead of 5 for the same amount, happy days. IO, interest only. This is interest only repayments. So when you're making your mortgage repayments, you're only paying interest. You're not actually paying the principal off, so it doesn't bring your loan down. It's a very common tactic used by investors to really help with the cash flow on that side of things. P&I is principal and interest, where you pay back the interest plus a little bit of that principal comes off. Stamps and legals. So if you hear that, basically means it's your stamp duty, and obviously the legals is your searches, your titles, your legal cost to your solicitor, conveyancer, whoever it is. Usually kind of gets packaged up when we send out quotes on how much you might need to pay for your payments, etc. Negative and positive gearing. Positive gearing is the net profit that you would have after all your expenses from your rent that comes in. A guarantor. A guarantor is someone who provides you a guarantee in order for you to get a property purchase. A guarantee is where it basically gives the banks extra security in order to give you riskier lending. Offset, so offset accounts, fantastic if we require them. Basically what an offset account does, if you open your online net banking, it looks exactly the same as a normal transaction, but rather than you accruing interest, it actually offsets the interest that the bank charges you against your mortgage. Redraw is where you basically work similar to an offset, but you actually pay the loan off. Now the thing is with redraw is that as you pay off your loan, because it's paying off less, it's actually that amount available will dwindle faster. Whereas when it's in an offset, it doesn't actually become unavailable funds as you're not paying that off quicker. Annual fee. So lenders can charge an annual fee, usually about $395, $400 a year. For things like your offset accounts, if you want credit cards, benefits, cheaper rates, etc., there's an annual fee that some lenders do charge for their service. Establishment fees. So these are the one-off fees initially where you might pay for your mortgage, re-registration, deregistration, settlement fees, all that type of stuff. Some lenders have them, some don't, but they're all kind of categorized in your establishment fees for those one-offs. Body corp strata, that is the company or the body corporate that looks after your investment dwelling. So if you're in a block of units, you'll have the strata that looks outside the four walls. So that's your body corp and strata. They're the company that's going to look after your block of 10 units or block of 100 units, and they make all the external decisions there. So you'll pay a fee for that and they look after that. And stratas can be quite expensive depending on if it's a big one with a lot of maintenance and pools and gyms and elevators, or if it's a smaller strata, if it's a smaller complex, a bit older, not too much there. And the last one is landlord insurance. So the insurance policy that you take out in order to protect your investment property and yourself in case your tenant does anything wrong. So that is a good overview of some of the acronyms that you'll see probably flying around on our videos and all that type of jazz. Hopefully that helps, but Google is also a very great resource for that. So if you have any questions, feel free to reach out. Hopefully that helps for now, and look forward to hopefully working with you soon. Cheers.